Hey there, everybody. Welcome back to another 21st Century Renaissance, another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. We're still waiting, right? Waiting. That seems to be the theme of of kind of later February and March, given kind of this sort of price engineering cycle we're in. We entered into a pretty clear IV and volatility cycle right back in the middle of January, heading into mid to late February. That was, kind of a textbook case of what we were expecting from the sort of thing that user Gherkinit wrote about way back in 2021 in the River Runs Dry DD. This one maybe a little bit different, right? And possibly contributing to some of this difference, some of our overall market conditions, some of our, this 4-week kind of IV lead up here, which is very interesting to see. And that's sort of, I have a sense that that's shaping a lot of our week-to-week price action here, right? A lot of what I look at is just kind of understand our context. So much of our price action is really just kind of whatever's happening over in ETF land, right? I mean, who knows if really any of the buying or selling that we're seeing on a day-to-day basis has anything to do with whether people are buying the stock or not. I mean, seems like maybe this is, just kind of more of that. So we take a look at some of the indicators that we do have access to, try to make sense of what's going on a regular basis and try to see, okay, is something coming up, right? Is something coming around the bend? We're still 20, think about this, right? We are still 3 weeks out from earnings. We still have a ways to go. So what exactly is that going to look like? Well, I mean, just kind of looking at our options data, it looks like kind of more of the same, right? Looks like kind of more of the same. So we'll get into it today. Not too much kind of exciting in this sense, but got to stay on top of things. So so let's hop into it. Gratitude first and foremost goes out. Steve Sallow once again, Dave Datscrufto, Ken Wedmerlin. Thank you guys. Of course, once again, thank you everyone who has contributed to the channel so far. Right, everything we do here, everything I do here is completely open access, no paywalls, no monetization, just trying to understand what's going on. So everyone who has contributed, who has helped support me so far in this endeavor, thank you so much. I hope I can continue to be a source of good and a source of further understanding for everyone who is interested and invested in this GameStonk of ours. So let's keep going. So okay. So what are we looking at today? Got to give a shout out over to the Ultimator 5, doing some great work over there on his channel, over on I should say his X page, right? And on Reddit, still has access to Reddit, which is great. One of the things he does and has been doing for a while has been mapping out when to expect our computer share recurring buys. Usually they happen between 10:45 and 11:15 a.m. Eastern Standard Time. He's right on the nose about that being about $500,000 worth of buy pressure. So now it'll come onto the lit market. It'll probably be around 50,000 shares, right? Something like that. I guess it would be at this price slightly under 20,000. I have to make an adjustment there. Slightly under 20,000, which is, not a ton of shares, but we will be, it does come on. It is noticeable. But I will say, right, it's it doesn't really put very much of a dent in the stock price. It is visible. Traders do trade around it. They are aware of it, and institutions are aware of it as well. So it can be a little bit tricky to try to trade it, right? It's not going to move until it's really going to move. And what we've seen a lot of the time is we do see that institutions will short the stock into this and then cover back to the upside, right, once it's to encompass some of that buying. my guess is in order to prevent too much of an options cascade, right? Don't want to cause some sort of event, or don't want day traders getting too bold about trading this, understanding that this much buy pressure is going to come from computer share recurring buys. I've never seen it turn into anything really crazy, but I mean, a lot of that might be through or as a result of the types of price controls we've seen. So yeah, but just shout out to Ultimator for really staying on the ball, reminding us of this stuff, giving us an opportunity to monitor a specific kind of retail trade that comes in together. So big shout out to him, and thanks for keeping track of this. Also, it's a great graphic he put together there. I like the little ape in the suit. Ape in the suit's good. Monkey in the suit, eh? So yeah, I mean, we're kind of looking at more of the same here market-wise. It's the big bear life, right? We saw that kind of yesterday. Big bear life, of course. What do I mean by that? I mean a lot of puts, right? I mean a lot of trader long puts, dealer short puts, which means dealers are hedging these positions in terms of delta and gamma, especially gamma hedging, in sympathy with the direction of the movement of the price. This is what makes put gamma dominant conditions very volatile, and why we see SPY's IV spike up under these conditions, right? So SPY's IV, the S&P IV, goes up as the price goes down. So we see IV spike. We go into these conditions, and dealers, of course, will gamma hedge their options contracts, options dealers, I should say, right, in whatever direction under these put dominant trader long put dominant conditions. They will hedge their positions dynamically in the direction that the price is moving. So as the price moves down through these put positions, they're selling shares. As it moves up through these put positions, they're buying shares. So that's where we get these big swings intraday. But of course, because we are under this sort of broader bearish momentum, we can see that on some of our deeper charts. When we bounce back to the upside, we don't reclaim higher highs, right? We log lower highs and dig into deeper lows. So it looks like more of that is on the table going forward. And as we take a look, right, we see this in our gamma data, right? I mean, it is just puts as far as the eye can see. It is just put gamma, put gamma, put gamma, put gamma. Just wow, it's just it's a lot. It's a lot that just keeps piling up there, right? All the way down, right? What's the meme? Like it's turtles all the way down. Man, dog, it is put gex all the way down. So this says we're just gonna whoop-de-doop-de-doop up and down this stuff, and we are very far from stable land. We are not anywhere close. To our upside is a bit more neutral. So we do see, like, for example, it looks like we've already seen a bit of a reversal at this kind of neutral pocket above 580. We moved into that toward the end of the day yesterday from the looks of it, and then started moving down, pre-market back, back to the downside there. I think last time I checked, we were in the 576 kind of range. So something along those lines. Just expect more of this, right? Which means that some abrupt downside can also be seen in GameStop, and we'll see in a second from GameStop's GEX data itself that a little bit of a run back down to our weekly low is not off the table. It's not what you want to see, you root for the stock, right? You want to see things go bullish all the time, right? We want to get out of these weird price engineered transpositions to the downside. We want to see institutions cover their short positions. We want to see them get their swaps out of the way. Like, we just get out of here with that stuff. Just we don't want any of your swap doohickeys around here, Buster, right? We don't want to see that stuff. It's not, you know what? I come on the internet for just good, clean stock fun. And instead we get that. And I'm not, I miss the old days. That's what I'm saying. That's all that I'm saying. Could wrap up the video right there, but I won't. We'll keep talking about the stock. So Yeah, yesterday, right? Again, we kind of follow broadly. We don't, go kind of beat for beat with SPY, but broadly, SPY has an up day, GameStop up day. SPY has a down day, GameStop down day, and our volume is so low, right? We got down, man, with 3.2 million shares yesterday. That's pretty darn close to 52-week lows on the stock. Got to a new weekly high, 25.16. Love to see that. That was great. Moving a little bit back to the downside now. We're in the upper 24s. So is SPY. Like, hey, I would love to see, right? Hey, Richard's been talking about the potential of some of these, maybe clearing some of these XRT fails, since XRT's on the threshold securities list. Maybe some stuff from way back if fails, the XRT fails from back in January. I don't know. I guess some of those are cleared, but how are those cleared? Something like that. Did those get like rotated over to individual security fails, and then those fails, like fails on fails on fails? Anyway, yeah, Richard's been talking about potential of maybe we get some sort of closing like that heading into the end of the week, maybe today, right? March 6th. That's certainly very cool to see that. And if we do, right, if something like that does manage to find its way onto the tape on the lit market, right, we do have an options setup that is positioned to very sensitively send us to the upside. So we'll talk a bit more about that in a second. But we got a New York Stock Exchange Chicago trade yesterday. Pretty cool, right? Options pretty low. Nice that they were bullish, but I mean overall volume pretty low. Right, so we got this none side trade. So this is when we see none side, right? None side trades are trades from the floor of an exchange, typically that are instantly and simultaneously hedged. They come in as a hedged options order. So whoever opened this trade simultaneously bought all of the shares needed to delta hedge this position at the same time. So it comes in as a none side trade. Interesting to see somebody pick up all these 50s. 50s for June. So interesting trade. 1,300 of them. Very curious. But again, it is delta hedged. So I think, let's see. This came in as an ask order, right? Again, Ultimator pointed this out over on Red Stripe Tie. This came in as an ask order. So this options trade was a bearish options trade. So this was, whoever this was, sold 1,300 calls. Whatever the bid ask was. What was the spot? Yeah, at the bid, right? And we can see that. Right? There's the bid price. The bid price was 142. Spot 142. That was at the bid. Just simultaneously hedged their position by buying shares. So on whoever's books this is a delta neutral position. But yeah, this is a trader hoping to pocket this premium. My God, 1,300 contracts. So that's several $million, right? I guess something like that. No. I'm off by a decimal place. Oh, there it is. There's premium. 185K. So yeah, hey, pretty awesome. Good for you, I guess. If you found a buyer for those, if you saddled Wolverine trading with those, then nice job. Plus you're hedged, right? Hopefully you can dynamically hedge that position, but very interesting. Very interesting to see that come through. Looks potentially like it played a role in knocking our price up a bit toward the end of the day. Potentially, not sure, but cool to see that, I guess. Shares to borrow, haven't really budged. Haven't checked super recently. Just get this quick little refresh here. Anything? Nope, they're about the same. So we've not really seen anything in terms of direct shorting on the stock. Technical wise, yeah, I noticed this, right? 7 trading days in a row, we have used on the daily chart, use that 200 week 200-day moving average as an upward resistance level. So on each of our candles, anytime we go right up above that, we come right back down. Come right back down, come right back down. This one didn't quite make it. Go up, go above it, come right back down, go down. This one closed basically on it. So our price yesterday, our closing price yesterday was right on the 200-day moving average. Very curious to see that. And then, of course, to the bottom, as we talked about yesterday, we've got the 50-week. So, right, the tail end, our low on the week came to within, I think, 6 cents of the 50-week moving average. So weird to see us basically kind of pinned in that little pocket here. Very tight pocket, the tightest of pockets. If you put it in the microwave, it would become a tight, hot pocket. I always like the pepperoni flavor. That was a good one. The sauce in the pepperoni ones, not that great. But the pepperoni itself, spicy. Very good. Very like. Yeah, also for some reason, couldn't get any OI data from Unusual Whales today. Gamma data wasn't loading for a while, but OI data still couldn't get that to come up. Interesting though, maximum pain has our max pain down at 2450, so that does kind of lean a little bit towards the bearish side. Not crazy, but we'll see if this updates tomorrow over at Chart Exchange, and Chart Exchange says 2450. Then yeah, maybe max pain is 2450. We are now over. We're not quite right. We have not quite. I guess we're maybe right at. No, we probably a little bit more than the 90%. Right. For some reason, the options market maker, Wolverine Trading, they love 90%. They love to have, that's kind of their bread and butter. They love to have 90% of the calls every week out of the money. So if you see something like 98, 99%, something like that, pretty good odds that you're going to get a reversal back to the upside by the end of the week. If we're, usually you'll see that below max pain too. They like 90. They like 90%. They don't like 88%. But they do like 90%. That I have seen. Something to keep in mind, since we're over that mark, we're seeing the 2450 pop up, and if we look down at our gamma, 24 looking kind of slippery there. 2350, not as bad, but not awesome, not great. If we do kind of start to move to the downside, the market maker is going to go ahead and start to sell shares into that slip on downward. So if we see some weakness today, if we do get, if we get this 565 test over in SPY, we see something like that, then yeah, I think we slip on down. I mean, even 23 is not looking awesome. 2250 is kind of fine. Although, right, wasn't there that guy? Yeah, we just saw yesterday there were all those puts that were opened at 2250. Man, I really wish Unusual Whales would get the options chain working so I could see if that dude closed his 2250 puts, but I cannot, right? You can even look at it here, folks. I'm not making this up. It's just blank, right? Just blank. So Unusual Whales, not working today. What's going on, dogs? I hit y'all up on Twitter. I hope you, yeah, this guy, right? Seriously, dude, I hope you lose this trade, but, not trying to be a dick. but 2250 would not be, that wouldn't be fun. That's not as much fun. No, it's fun when it goes up. That's not fun. Also, why are you, this is like a 3, you took this as like this is now a 2 DTE trade. You took this as a 2 DTE trade the other day. Why'd you do that, man? What possessed you? Oh, see, this is one day. Oh, interesting. We can see it here. So nobody traded this yesterday. This guy didn't exit his position. If we bump back 2 days, what do we see? There he is. Why, dog? Why? Why did you do this? Why would white people do this? My question. I'm having another silly day today. feel free to like and subscribe to my channel. But yeah, it'd be cool to see what happened. It doesn't look like anything actually happened to that trade. But in any case, we could slip on down. In which case, it would be great if if there are FTDs that need to be covered, it'd be great if they got covered today, because that'd be cool, because then we could go up here and then this would just blow up, because that's a lot of call gamma, right? Intraday low flows, that 25, that's a pretty strong roof on top of our position, right? Because as gamma goes up, right? So hedge into that, right? Market maker's going to hedge into that. Gamma's going to go up as it's about to go in the money. And then right when it's going to go into the money, gamma value is going to start to go down and the market maker is going to sell, right, as it moves through here. But there is so much gamma kind of on top of here that might override that, which kind of gives this ramp property. We have quite a bit of 2550, 2650 is not bad either. Yeah, I don't know, if somebody wanted to come around and just like buy, I don't know, 3 million shares or something, like this thing would just go kaboom, right? And that's not necessarily what happens when, with other stocks. But with GameStop and this options environment, it would go nuts, especially because look at that. Up we go. Up we go. We are at IV levels that are the highest we've seen since, yeah, way back here, right? Since our drop, right? In this area, basically up here, right? Since our drop from 31-ish, 3168, I think. This was our drop. And then we kind of, after OPEX, we had a little hurrah, and then we went down, and then we've just been grinding, just been on that grind sesh, down, 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 down. We had a week of recovery, down, 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 hit 52-week lows. Actually, right after, that big, huge upward event that went all the way back to 3166. After hours on the 13th, and then the 14th of February, right, sold off, hit 52-week lows. But weirdly, right, looked like we were going to have some continuation maybe into the next week. We bumped up and then sold off. And then sold off. But IV did not. And IV has been just on this little crank sesh, just cranking it to the upside here, slowly but surely. A little slow crank. as it just keeps moving up. So now we're at levels that are all the way back there, even though we're dollars to the downside of where we were back in January. Many dollars. 10-day mean not looking as impressive there, but surely enough, we are on that trend. We are moving back to the upside. So this adds a lot of sensitivity to this environment. If something sets this off, right, I'm not surprised that institutions are trying to control the price, because if we start to move back to the upside with any kind of haste, like things are going to get spicy. It's going to get spicy. We get some upward volatility event. Maybe the old swap rollers, maybe they don't like that, right? Maybe they don't like that. I don't know. I didn't write the script, right? I mean, I wrote this script in the sense that I came up with my own words. But I didn't write the market script today, right? I didn't write the price action script. So, if anyone would like me to write the price action script, if anyone is auditing my channel, any of the people who got me banned from Reddit, if you're auditing my channel and you would like me to have a job writing the price action script for GameStop, I could do that. It'd be kind of boring. I'm a big fan of right angles. And they just kind of they go up like that. So if you want me to do that price script, all for you. Yeah, I'm your guy. But if not, I'll just keep doing this. Sounds good. So not a ton of exciting stuff, but definitely some things to keep in mind. Keep our appetites whetted, right? Because we don't whet our appetites in English, we whet them. Bet you didn't know that, but now you do. And that's why you should subscribe to my channel. Yeah, no. I guess, yeah, that's about it for today. On a day like today, right? What do you really call out for? I'm in all silliness, right? Seriousness, please. you know, hopefully this can be of use, keeping in mind, right? We love to see that recovery to the upside. But downside risk, even though it's not fun, it is there, especially given the volatility we've seen in the broader market. So, be careful with your trades out there, right? None of this is trade advice. It's for entertainment and educational purposes only, but be educated and entertained safely is what I'm saying. That's my fully informed education and entertainment advice for your education and entertainment. So, yeah, good luck out there, everybody. Always a great time talking to you. Thank you for watching and listening. And yeah, fingers crossed. We see cool things. Everybody loves cool things. Me most of all. See you guys tomorrow.